Hey traders, welcome to Charts and Coffee. Happy Thursday, everybody. Hope everyone's doing well. We've got a lot of data crammed in these next two sessions. We started to see some of that data yesterday. This is a very, very quirky week. I can't remember the last time it felt like just collectively traders look at the week and say, what the heck do we do? We know this is sort of a holiday, it's not sort of a massively affected holiday, affected trading week, and yet we have inflation data by way of the ISM, ADP. We have actually a Fed member speaking right now. So between ADP and I believe Fed member Logan, we're seeing a pretty dramatic move to the downside. So what I'm going to do is start with, is this more of a macro case for a more hawkish Federal Reserve? And I know a lot of folks might say, well, Rog, can we really measure that? And that's absolutely we can. It's not going to be by simply looking at the NASDAQ or the S&P or even at the euro and the bond, which I think those three would be great places to check. In fact, bond rates and euro, the euro is up. So that's not dollar strength. And even we see the initial sell-off in the bond futures, which is yields going up. We're finally seeing now the yields are going back down a little bit, as price has sunk into the hourly price movement range on the 5-minute time frame. So kind of a mixed message. Indices freaking out, dollar not rallying, and yields leveling off after a quick push to the upside. Okay, so price-wise, not exactly the clearest picture. So let's head on over to, now this is Forex Factory. We'll get back on over here in a moment, but let's head on over to the CME FedWatch, right? So this is the CME FedWatch tool. Love this thing. This is the easiest way to decode the macro. Take a look at July 26th. Nothing to see here, gang. We are going to see a rate hike. It is over the 80%. This is fully discounted. The Federal Reserve will not hesitate to take advantage of the fact that we collectively, as traders and investors, said, yeah, we know you're going to hike the quarter point. It's done. So now we push out into the second hike for the second half of the year. Are we seeing any more clarity or probability on that? Take a look at November. This is a very different look than we saw even yesterday. As we go further into the year, not so much September, but November or December, now you can see the quarter point hike versus the pause. The pause column is the 5.25 to 5.5. The hike column is the 5.5 to 5.75, and they're neck and neck, right? You can see here for November, you can see here for December, they're neck and neck. So we're actually seeing, at least for a little while, we'll see where we are at the end of the day. We'll see where we are after non-farm payroll. That's probably even, that is definitely more important, right? So if we take a look at what's going on, really, it doesn't matter what's going on with July, not one bit. Push out into September, right? Push out into November, and that's where you'll see November, December, right? There you go. Okay, so that's where we sit right now. Again, don't worry about July rate hike coming. I don't care if it's 80% or 100%, the rate hike's coming. What is more interesting is, do we push through 5.25 to 5.5, which is where we'll be on the 26th of this month, and start inching towards 5.5 to 5.75? That alone would be reason enough for equities to sell off a little bit, because that's a more hawkish Federal Reserve, right? Okay, so moving on to our calendar, the ADP number, again, not a big number in terms of, well, no, it's a big release, right? 497,000, but it's one of those quirky numbers that don't necessarily map to what we're going to see in non-farm. This is a throwaway number to me, but at 8:15, you can definitely see the reaction that we saw with equities. Now, I will say, gang, equities were already rolling over after 7:30 Eastern. So, a good 45 minutes before this particular release, we were already seeing weakness in equities. And then you'll see the large candle that plotted at 8:30, but we were already punching down to lower lows and lower highs before that ADP. So the mood had already shifted. The momentum had already shifted. And then ADP just kind of gave it a quick little push because we are still in an environment where quote unquote good data is bad, right? Bad for equities. And then we do have heads up because when I'm in the futures room at our Sector Secrets Mastery later on this morning, and we're doing our day trading, had a pretty good day of day trading yesterday. It was great to see you all in the options room. We traded Meta. I walked y'all through a scalable approach to day trading options, which I'm a huge fan of. A lot of folks come to me and say, Rog, you've been trading futures, we hear, since you were 15 and a half. True story. I love futures. So I think a lot of folks are very interested in the leverage and the liquidity and the lack of a pattern day trading rule. But there are ways to make day trading options equally as appealing. We can trade a certain amount of options that sort of recreate what a mini exposure would be like, right? There's a notional value equation that we can look at. There's also a way to scale into these in a way that's far better. Let me put it this way. Would I rather be in, say, 4 QQQ calls or 1 NASDAQ futures contract? 1 unit actually is very problematic. And 4 units gives me a lot more ability to scale in and scale out as opposed to this 1 unit of something. So there's a lot of reasons why we can take even small accounts that want to have some needle moving trades and still focus on day trading options with affordability, scalability, and no pattern day trading rules. So those are things that I love to do. We got to dive into that a little bit yesterday. Hopefully we'll dive into that again today. We'll see what kind of market we inherit going into Jolts at 10. It will not be a dull morning. All right. So let's get to it. Let's jump into our questions. Quick look at what we've got going on. So let's jump on over to my beloved TradingView charts. All right, let's get to work. Okay, first up is question from YouTube. Do I follow the big players on Wall Street to make my trading decisions? Bob, I follow volume. Yeah, so when we say big players, there's a lot of things that get thrown around as far as commercial banks and this and that. They're never going to project what they're doing, right? Their whole point is to play a game of magic, right? Make a whole bunch of noise over here so I can make an elephant disappear over there. I follow volume. That's the best way to decode them. And so in that, yes, I use price-based volume. All right, next up, Doug asks, what's the relationship of golf to the ADP report of gold? I'd rather talk about golf, Doug. Gold and the ADP. So there's a couple moving parts. ADP is sort of a precursor to non-farm payroll. Obviously, it's a jobs number. Jobs numbers will influence what we think the tone and the messaging and the action ultimately is going to be from the Federal Reserve. As far as gold goes, remember, gold's relationship is one that's more tethered to real yields or real interest rates, which is the difference between the nominal yield of a bond and the rate of inflation. So it's a few steps removed. I don't believe it's a direct relationship, but if there is more of a direct relationship to what GC futures would do, say 8:15 in the morning in reaction to ADP, it's basically going to move with bonds, right? You're going to see a positive or sympathetic correlation with bonds. Okay, Doug? All right, next up is, let's see here. Bad Boy asks, from our training room, new to options, what do I think is the best strategy to learn put and call credit spreads or verticals? If you're new to options, Bad Boy, my advice is don't go into multi-leg. No, so I'm not a fan of that at all. So if you want to know more about put and call spreads, verticals, I think there's a whole host of other traders here at Simpler that could walk you through that. I'm not a fan, and here's why. There is no multi-leg strategy. There is no credit-oriented strategy that is going to suddenly give us successful results, because we're told again and again and again, right? What do we hear? And I'm with you, Bad Boy. I used to hear the same thing 30 years ago. People running off of the mouth telling me that the only way to trade options profitably is to write premium. That's wrong. That's just simply wrong, right? It's one way to do it, but what it does tend to make traders, new and experienced alike, feel that if they turn their trades into some sort of credit-oriented approach, that they've got the path to success as an options trader. The fact of the matter is that's not true. The only way to succeed at trading, even if we're going to collect credit, even if people are saying these are non-directional trades, is to get direction right. Because even non-directional trades have to get direction right. What crushes, say, an iron condor trader? A trend. It crushes them, right? So we always have to say, are we trading in an uptrend, downtrend, choppy range, or narrow range, right? Once we determine that, then we can look at the myriad of amazing option strategies and say, which one is going to suit me best? So to me, if I cannot, and this is what I taught myself years and years ago, decades at this point, if I cannot get a simple long call or long put right in terms of timing, turning it into a multi-leg credit strategy is not going to make it any better. But I think a lot of traders feel, those are the crash pads. That's the safety belt. That's the airbag to options trading. So I hope that makes sense. If you're new to options, get long calls, get long puts right. And then everything else you're going to want to do as a trader will be on that foundation of understanding the choice of strike, the choice of expiration, directional understanding, right? Directional bias, as well as then, any myriad of option strategies. Because remember, and this will be my last point on this, there are only a handful of things we could do with options. Yes, you can, behind me, I've got an options book of strategies. It's about 1.5 inches thick. What's hilarious to me is at the end of the day, there's only 4 things we can do: buy or sell a call, buy or sell a put. And when we combine one of those 4 things together, now we've got option strategies. Yes. But at the end of the day, that's all we can do: buy or sell a call, buy or sell a put. And then when you put those in combination, right, there come 4.7 million different option strategies. All right. So that's my 2 cents, maybe 6 cents there. All right. Next up, and thank you for the question. How do I make Forex Factory calendar black and not white? Oh, sure. So over at Forex Factory, let me go back on over there. This is not a function. So yeah, most of you will notice I have dark backgrounds. It's just easier on my eyes anyway. And a lot of our members prefer the dark. I actually use something called Dark Reader. I'm using Firefox here. So I don't know that there's not an equivalent on most platforms: Chrome, Edge, Firefox, etc. So go get the plugin. It's called Dark Reader, and I just run Dark Reader on all my browsers. Big fan of that. It makes everything that even my Twitter feed, right? It goes to that dark background. So big fan of this. Yeah. Some sites will have their own dark background. So for example, Trading Economics, I can choose dark mode. And there's a lot more sites that are realizing, hey, I want a dark mode, right? But if your site doesn't have it, or you just want one that blanketly changes everything in a web browser to dark, there's a few sites where it's a little tricky. I would say the ones that are a little tricky would be, I like Estimize come earnings season. This one can be a little tricky, especially when I start getting into the graphs of the whisper numbers and so forth. But even that looks pretty darn good. Yeah, so there you go. Okay, next up is, what would be my time frame for a long call or put? 30 days or 60 days to expiration? Editor, it depends on the trend, depends on the time frame, depends on the setup. So I will give trending markets, if I can, more time to expiration. I'll give non-trending markets less time. I'll give a 1 hour time frame, sometimes less time. I'll give a daily time frame, more time. So it just depends on what time frame I'm setting it up on and what the underlying structure of that time frame is. All right, next up, Jameis asked, the DPMR setting on the NQ. All right, let's talk about some DPMRs. Let me jump on over there. Okay. The DPMR setting up inside a daily. Okay, let's jump. So for those of you that don't know some of these acronyms, yeah? Okay, the DPMR is the daily price movement range. And that is this thing. That's the support right there. And then this yellow or gold color, that's the resistance. This is the bigger sister, if you will, to the HPMRs, right? Which are the red and green zones on my 5-minute chart. It's the hourly price movement range I'll use for day trading or intraday trading, using volatility support and resistance. And then when I move on to swing trading, using a 1 hour, 4 hour, daily, whatever, That's a longer term overnight in nature trade. I'll use the daily price movement ranges, which are the gold and the gray. Okay. All right. So with that being said, the DPMR is setting up. I don't have that right now. I don't see that, but let's see. I see a point of control, but this is only anchored to basically mid-May. So let's see. Um, yeah, the DPMR is setting up inside a daily setup. I don't see the same thing, but I need price to get down to about this area here around 15,000. So I'll check my settings. Actually, you know what? Let me just double check. We'll just jump on over to, let's just jump on over to NQ just on toss just to make sure. And survey says, and make sure you're using the current one, my friend. Yeah, no, make sure. So daily price movement ranges, much like HPMRs, yeah, are updated. So please make sure you're using the current one because I've got to get down to about 15,080 before I can do anything with even the upper edge of our daily price movement range. But if it gets down there, yes, if it gets down there, I'm game. Yeah, this is still an uptrend, gang. Great question about the uptrend. This is still, even though this is a big down candle, right? Everyone's going to be all sad mac about this. This is still an overall uptrend, right? This is still very much an uptrend. This is still support. And this movement lower is the opportunity. So to me, we have a couple of windows. We have the 10 a.m. hot zone coming up. Maybe that moves price in our direction, which is lower, so we can be buyers, right? I want to be a buyer at the high. How many folks bought into yesterday's high? Bad move, right? Because in the context of an overall uptrend, we are going to get opportunities like this one. And I don't mean to be salt in a wound to anyone who is long. This is what we're waiting for. An overall uptrend that retraces, reverts, whatever the word is you want to use, pulls back. That's what we're looking for. This is where we want to be buyers, right? Not here, not there, right? So I love the idea. I love the idea. All right. So last question before we wrap it up. Is there a discount for Sector Secrets with the 4th of July sale? Andy, there is. A couple big discounts that I wanted to mention. Number one, HPMRs, 30% off, and Sector Secrets, 30% off. Yes. The sale ends I think the sale ends in 2 days. Yeah, what is today? The 6th? So I think the sale ends in about a day and a half. I think we're down to, last time I looked at the countdown, I think we had 1 day and 15 hours left. So basically, I think it's midnight Friday. So yeah, if there's something you want to scoop up, whether that be HPMR, Sector Secrets Mastery, or whatever else you've got on your wish list, yeah, I would scoop it up before the end of the week. All right, gang. Thanks as always for being a part of Charts and Coffee. Caffeinate and dominate, gang. I'll see you all in the futures room in the Sector Secrets Mastery shortly. Be good to each other.